All right, so I'm gonna pull the trigger there on a light short, just one minute here. Want to keep risk light. All right, so perfectly reached up for that stop. Let me see what they got here. 5-minute fair value gap. Want to see if we can trade into that. If they leave it open and break down, then I will look to take one more potential short. But right now, I want to read the order flow because if the market's going to keep going higher, then I don't want to take another short setup. So what I'm watching here is this gap, the gap that I was using. So I was using just a 1-minute fair value gap to frame the short setup. I want to see how we trade here, right? If we use this as support and trade higher, then that would not be bearish. All right, so I'm going to go ahead and reverse this long here. So I'm looking at this as a retracement, looking for the market to continue higher here. Just trim a little bit of risk. So this down close candle here, just below 50% of it. All right, so now the market dropping into that fair value gap there. That could be an opportunity for me to add, right? So if I wanted to build it up into 2 contracts, this retracement here gives me an opportunity to add one more. Because I'm just trying to keep my risk low today, though, I'm not interested in building in a bigger position. But just teaching you guys pyramiding, right? And if you did want to build in bigger positions, how you could go ahead and do that, right? That's offering a good discount when we're looking for this high. So that could be a good opportunity to add if your equity allowed you to do so. All right, so what I did there is I framed the rejection block on the hourly chart. So just the highest body, that's going to be the target. So above this high, just going to look for that. All right, so because we're in macro window, I do want to see some speed here. So I can see how this fair value gap here, market staying in the upper half. That's good. We want to see some speed here, though, because we are in the macro window. It should start to accelerate to the upside. Right, so we got the market trading into the down close candle here. So that's permissible to trade into the order block here, which is why I like that fair value gap entry, because then that allows me to keep the stop placement below this down close here. If we are hitting this order block, though, we do need to see explosive price movement away from it, right? So very similar to how we use a fair value gap, right? If it trades into a fair value gap, we want to see it hit it, stay in the upper half, and explosively trade away. We want to see the same thing with the bullish order block. So just trading into the bullish order block here, I want to see a strong reaction and a repricing away from it to continue higher, because that's going to confirm to me that smart money is buying this bullish order block and that they're likely going to keep taking it higher, right? And that's something that we look for in price action. So when it's retracing like this, right, we're watching the key PD arrays and we're studying how does it trade there. This is exactly what we want to see, right? A displacement higher away from that. All right, so now this gap here, we've closed above it. We want to see it use as support as an inversion gap and reach higher. All right, so risk is reduced here. I said I would reduce it once we get above this high, which I will even more, but right now I don't want to see it trade through this fair value gap there. So risk is trimmed, and now we have a super tight stop. All right, we want to see some speed through this high here. Above this high, that's 10 handles. I'm going to close everything out here on my other account here at 10 points just to lock in the profit, because that mitigates that earlier loss and puts me up a couple $100 with nothing crazy, but good enough for a morning where I initially got stopped out. So we want to see speed through this high into that rejection block though. All right, that high delivered, trader paid. All right, so stops in a roll to break even. We really want to see them dig it up into that rejection block there. All right, boom, that paid me at the 82s on this account here. Just a little bit more. Bam. Beautiful, 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 beautiful. All right, so I want to go ahead and review real quick here. So initially got stopped out here. Was looking for a retracement back down, a little deeper of a retracement. But that's the good thing when you use these levels here, right? And you use the concepts that we use, is everything has a logic and everything has a process. Man, for those of you guys that stayed, man, you guys are going to get some juice here. Or get some sauce, which is going to juice you up. All right, so this is what I was saying, though. Whenever you take a stop loss, it's no big deal. What you're getting is front row seats for the next price run. This fair value gap here, I use that as a short as we traded up into it. What did the market tell me, though? Hey, man, this fair value gap, that's not a short. It's going to be used as support. Okay, great. As soon as it displaces higher, I'm long. I wanted to time my entry. I'll send the screenshots of my other account trade. I wanted to I mean, the entry was fairly decent, but I wanted to get inside the body of this candle here. Still got it underneath that inversion fair value gap, which is still good, right? Because I still could have bought this inversion fair value gap since it's dipping down into it, right? So there was two pyramiding entries that were available, right? So this initial entry here, and then as it's deeply retracing into the fair value gap and order block, I'm telling you guys, this is a new adding opportunity. We're not freaking out because it's retracing. We understand it's going to drop. I said it can hit the order block, but how does it need to trade when it hits that order block? This right here, right? It needs to quickly displace away from it, because that's going to confirm that smart money was accumulating inside of this discount array being the bullish order block. We get a displacement away, inversion fair value gap support. You could add there as well, right? So you can enter here, another entry, wham, goes up into the targets. So when you take a losing trade and you're using these levels here, I've taught this before, but I'll share it again here. You can mitigate losing trades with the same level. What do I mean by that? Well, okay, if I'm using this fair value gap here, let me take off these arrows. If I'm using that fair value gap there to go short, right, and then it trades through it and stops me out, I can then mitigate that losing trade using that same level as an inversion. Let's say it again. So if you use a level, like a fair value gap, we know they invert their role when order flow shifts. So if we're bearish, this gap should do what? Send price lower. But if it's not going to send price lower, what's it going to act as? An inversion fair value gap, right? So if I get stopped out on a fair value gap with the stop here, I'm fine with that stop loss. That's great. Take me out. I don't want to be in the trade anymore. And then I'm reading. I told you we're watching what? This balanced price range here. It did what? It lent support. As soon as it displaces away from it, I'm in there managing risk and then mitigating losing trade and putting myself up in good profit on the day. I think it's going to be about $700-800 today. Nothing crazy, but you guys can see, right? These little wins add up week after week. And I'm trading my lowest size, right? Wait till I'm really in here ripping the shit out of these markets, pyramiding, right? With 2-3 minis. And then we're really starting to run up equity. But when those market conditions are present, then that's something I'll do. So saying that to say, losing trades are nothing to fear, right? Because when you have the logic that we're using, there's a logic, there's a process, and there's something you can do with it. So if I'm ever entering on a fair value gap, I'm not scared to enter there and it stops down, because now I got front row seats for the next price run, which is what? Higher. Why'd I choose that exit? What's this black line here? Well, I could see that the bullish, or that the bias for this hourly 11 a.m. candle was bullish, right? It's going to expand higher. So if that's the case, right, and this bias is bullish, I can aim for this high here, sure. But at the same time, I just have on one minute. I don't have on multiple contracts. If I had on multiple contracts, I would be taking a partial there. Stop would be a break even. I'm going to the gym. No matter what, I'm making money. If it reaches these targets, awesome. If it doesn't, great. I'm still locking in cash. That's how I would manage it if I had multiple contracts. But because I just have one, and I already took an initial small stop loss, I'm trying to fix that stop loss and put myself up 700-800 on the day. So nothing crazy, but that's why I managed it the way I did. And then the reason I took it off here is because this is easy, low-hanging fruit. The rejection block here, the highest body. The other target I could have used would be mid-gap here, or mid-wick. Sorry, wicks are gaps, though, so technically it's correct. But this wick here, take 50% of that, send that through. That could be a partial as well. And then you could obviously wait for the previous day's high as the ultimate draw. But because, again, I'm mitigating a losing trade, I want to finish the day up green. It's already Thursday. It's already late in the week. I want to be paid this week. So I'm just taking off the trade there at like 13, 14 points. So, again, took about a 6-7 point stop loss, and then making back 13, 14 points, whatever it was, rounds out a fairly decent morning session after having missed the run, right? So again, I missed the initial run, right? Like we would have been extremely paid if I would have been able to get this ideal entry here and ride this up. But that's fine, right? That's why we have models. That's why we wait for things, right? So what do we get here? For the bullish setup, the market dropped down, took out sell stops here, and then we rejected it to the upside. So we had what? A run on sell stops. Like I told you, that prices in a short-term discount, and I can trust going long here, and that this is going to be an intermediate term low. Why is this going to be an intermediate term low? Because we took out the stops here, and then we rejected that fair value gap. So stop run, and then we shift order flow bullish. You see that? So now I can trust going long with this being an intermediate term low here. Because I have a little more experience, I don't have to enter and have a stop down here below the intermediate term low, because I know the PD arrays as I taught you guys in the content. So I'm able to have a stop just below the bullish order block, because just like I taught you guys to use them, if the order block's bullish, the best order block's it's going to stay in the upper half. So I can have a stop loss below 50% of that order block there. Market drops, hits the order block, displaces higher inversion fair value gap, uses its support, trades through the high, and then hits that rejection block there that I had. So that was the trade, framing it with intermediate term low after we had the stop run. So stop run, shift in order flow, model I'm using almost every single day.